Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video where I'll be talking about sort of the differences between looking at a footprint chart, right, the volume that's being traded inside the bar, as opposed to just looking at a normal candlestick chart. Now, before we jump in, if you enjoy learning from these videos, don't forget to subscribe to my channel and click that notification bell so you don't miss a new upload. And if you find today's video helpful, make sure you hit the like button for me and leave a comment, sharing your biggest takeaway or, some comments in general about trading. I love hearing your feedback. I love hearing about how other traders use order flow in their trading. Trading is a journey. You don't reach a final destination. You're always growing as a trader. And, your support, your comments, your subscribing to the channel, etc., really goes a long way in helping me create more great content just like this. So if you're getting value from my channel, want to see more, make sure you subscribe and let's grow together. So let's jump into today's topic, right? I alluded to it just a little bit earlier about sort of the difference between trading a basic candlestick chart as opposed to trading a footprint chart, which has the volume that's being traded at each level. And, a long time ago, the early creators of the footprint chart, they say you see inside the candle with the footprint. And it really is. It's like having an x-ray into how the candle forms. And, just recently I got a question from D.S. Smith. He says, I'm no order flow expert, but I think people are focusing on the numbers and forgetting they are still, in essence, looking at a candle, right? The body and the wicks are the numbers. Remove the color from the candle, the numbers are underneath. Add color to the candle, you no longer see the numbers. All you see is the body and or the wicks moving up or down or remaining still. I try to break it down into its simplest form. Yeah, I mean, really as a trader, you want to break it down into your simplest form. Like I said previously, I'm no order flow expert. I don't even use it. But when I saw what was being represented on the screen, my mind's eye came up with the explanation I mentioned above. However, if I'm wrong in my explanation, someone please help me understand. I don't say there's no right or wrong in trading. I remember being a student in school and had a teacher, right? I remember early in the year, she's like, oh, there's no right or wrong answer. The only wrong answer is not answering. And I answered one time and she says, well, you're wrong. I was like, okay, you just, a couple weeks ago you said there's no right or wrong answer. But really, when I first started trading, right, I was looking at candles, right? This was back in the late 1980s. Steve Neeson, had released his big books on Japanese candlestick charts, like the types you would put on your coffee table. They're so big and thick like that. And, it wasn't, and I never really gave much thought into, how the candle is forming. Okay, so let's take a look here. Right, so again, this was today's action in the E-minis, right? Now, we had a high of the day, right? Then the market sold off from our highs down to new lows. Okay, well, why does the market choose to sell off here as opposed to here? Well, for me, right, and this is why I use order flows, because it allows me to see inside the candle. If I was, let me just open up really quick a simple bar chart here, E-minis. And, well, it's the same chart. So 1 minute candlestick chart, okay? Make sure I got my white candlestick background. Okay, so let's just go back here, right? This was the high of the day. Let me get the crosshairs up. Right? This was the high of the day. We sold off from this high down to new lows, right? Then from the lows, we rallied back up. Not quite hitting the highs, but we had a nice, beautiful rally from these lows in the 70s all the way up above double O. And people, will say, well, what makes this candle so much better than this previous red candle or this other red candle? Well, to me, it's the order flow, right? That's why I look at a footprint chart to give me insights into what's happening in the market. On this red candle here, yeah, I mean, you had heavy volume, 7,000 contracts, 7,361, but there's nothing really bearish happening in this bar. Okay, we're one tick off the high. Did the market sell off? Well, I mean, it went lower from 0.3 down to 1 3/4, 5 ticks. But this bar here, in my opinion, gave a much stronger signal of potential bearish activity that was to come. Right? We had that divergence up here at the highs. We had a new high with negative delta. Right over here, we had negative delta minus 63. Okay, here you have a bearish prominent point of control. Right up here, you don't have a bearish prominent point of control. Over here, you have a stacked selling imbalance in the bar. Over here, you have no selling imbalances in the bar. And even in here, you see a single print, one contract taking place in that bar. So while this is a red candle, this is a red candle, two red candles, this is the one the market reacted to. Okay? Even if you're not convinced, the market looks like it's going sideways, then you get another red candle with a bearish prominent point of control. Now, I did a video earlier today on the importance of the delta, at this high, giving signals of a potential sell-off. But I didn't even talk about the point of controls. But you got the bearish prominent point of control coming in here, If you're just looking at a plain candlestick chart, right? Let me just make this bigger and get into this area. Well, I don't know. How does this one look any different than this high or even this high? Yeah, you had a little sell-off here, but this is the one that we powered down from, the 05, 06 area down into the 70s. But it was the signs by looking inside of the bar at the actual order flow. Okay, now let's take a look here, right? Because we made these lows down here. Well, why did the market rally off this low and not this low or this low? Right? Here's your bullish engulfing pattern right here, right? Here's your hammer candlestick pattern, right? The bullish one. The market, technically the market went up a little bit here. Why didn't the market rally off this bullish hammer? Okay, is that a hammer? I get confused on all these candlestick names. The long wick down. Here you got a bunch of wicks, right? I know people have to trade wicks, right? Saying, oh, the market is rejecting these areas. Well, okay, came back down and traded there. Came back down, blew through that area. But here, you had a nice rally off of. Why? Well, that's why looking at the order flow is going to give you, in my estimation, in my view, much better information to trade off of. Okay, so look at this, right? Where was all these wicks here, right? All these wicks coming in here, this whole area, big wicks, right? This is all just wicks from this 85 area down to 83 1/4, just all wicks. Nothing bullish coming in here, right? People say, well, you got these wicks, that indicates price rejection. Well, yeah, technically the market went up 2 points, if that even, but there's no real sign in the order flow of price rejection. If anything, you're seeing still some, selling weighing on the market. Okay, so you've still got selling weighing on the market. Chances are we're probably going to go lower, right? Came down here, another big wick down. The market go up, a little bit. Another big wick down. Market go up, 1.5 points. Market starts powering down. Got very bearish point of controls. Get down into here, new lows, right? Big green candle up, engulfing pattern. Well, market didn't go anywhere. Positive delta of 28 here. Positive delta of 283. Nice green candle. It got a couple buying imbalances. Maybe market could start to rally. Well, it didn't. You have a bullish slingshot point of control here, and it came back with the bearish prominent point of control here. Then look at this low at 1055. What do you have coming in here? You got a few things, right? First of all, you got 3 point of controls lined up, 1, 2, 3, right? So you got that a bit of balance forming down here at the low. And then as you start moving away from the low, what do you got? You got this bullish point of control. You got 1, 2, 3 buying imbalances, right? Over here earlier, right, you did have the divergence. You don't have a bullish point of control. You still got 1, 2, 3 buying imbalances, okay? So I know a bullish point of control is a sign of support. Okay, so I know I got support coming into this market. So not only do I have support coming into this market, but I have aggressive buying coming in. Okay, yeah, I've got positive delta 150. It's positive. It's not like overwhelmingly positive. Then I get another bar, red candle down with positive delta, which is actually bullish. I've explained that in other videos. Then another bullish prominent point of control here. So I got 1, 2 point of controls that are bullish, right? But at this point, right, if you're just looking at the market like this, right, it looks like we're just going sideways, which, even though we're making these new lows, it's basically going sideways between, 76 and 73, more or less. I love that you have these 3 point of controls forming at the same price level down here, because that indicates to me that there is support coming in, right, at that level of 73. So if I know that there's support at 73, right, I just draw my line there. This is my support area. Okay, are we staying above it? Yes. Do I see bullish order flow coming in? Yes. Bullish prominent point of control in here, right? Another slingshot point of control. But I do have a bearish prominent point of control coming in right here. Comes off a little bit. This is my support area at 73. Bullish prominent point of control, zero print. Okay. At this point, I know that I've come in, I've tested this support area. And again, why is, to me, 73 support? It's because it's formed by volume in the market. Right? It's formed by these 3 bars volume. Then I see the bullish order flow come in, and now I could be looking that, yeah, this market can start to rally. And again, if I'm wrong, I'll know pretty quick, right? I'll know if we break 73, I'm completely wrong. And we don't, right? We just keep going up. Thin print, 0. Thin print, 0. Bullish prominent point of control. You got more imbalances. Here you got 1, 2, 3. Here you got 1, 2, 3 buying imbalances. Okay? And the market proceeded to rally up. So in my opinion, you know, yeah, it's fine looking at candlestick charts, right? I mean, that's how I started, right? I started charting candlesticks by hand back in the late 80s, you know, when I was still in college, and you know, we don't have the computing software, you know, the charting software. I mean, back then, you know, it's like Metastock was the main thing that retail traders had, and TradeStation. But if you remember back in the 80s, TradeStation was like $2,000 or $3,000. Metastock was just $180 or something like that, not even 200. But you know, and even then with Metastock, it was just basically end of day data. Getting real-time data was very expensive back in the 80s and early 90s. So, you know, it's nice to look at candlesticks. I mean, that's how I started. I still look at candlesticks. That's why that was one of my main things with my softwares. You know, I told my programmer, I still want to look at the candlesticks, right? Because it's still important to me. Price action is still a part of my trading, right? But I use order flow to boost it, right? Because I want to know what I'm seeing. And, you know, and just, again, you know, I know the low of the day here is 72.25, and I see what's coming down into it. Then I see strong deltas here and here. Delta volume, 30%, 25%, right? We're closing near our max delta of 455. We close at 452. Max delta of 1,042. We close at 1,003. So I know there's strong aggressive buying. That I'm not going to see that on a normal candlestick chart, right? I can see, yeah, I can see a big green candle, which indicates to me that, yeah, there's obviously buying taking place. I just don't know the intensity of it. But by looking at the order flow, it gives me a clear reading of what that intensity is. All right, so that's going to wrap up this video on, you know, sort of the differences between looking at a plain candlestick and looking at an order flow volume footprint. So, you know, I hope you found this useful for your understanding of order flow, and let me know, you know, what you'd like me to discuss on another video in the future by leaving some comments below. So just make sure you subscribe to the channel if you've enjoyed this video, so you don't miss, you know, any of my upcoming videos. I've got another one planned based off of another user comment, and, you know, the whole point of doing this is to improve your trading. So thanks, guys. I'll see you on the next video. Bye-bye.